Hi, welcome to the Nestegg monthly ETF update for June, powered by ETF Securities. We're joined by Kanish Chugh. How are you going?
Not too bad, how are you, Lucy?
I'm really well. Thank you for asking. Let's get straight into it. How did the ETF market fare in June?
So ETF market in June, we saw an increase by 2.2% over the month. So currently the market sits at 38.9 billion across 179 ETFs. There were a number of products that were actually closed from iShares and ETF Securities, and we actually saw a few products launched as well.
Which ETFs had the biggest inflows and outflows?
So we actually saw Vanguard take 2 out of the top 3 spots in terms of inflows for the month of June. So their ASX 300 VAS ETF, that had close to $38 million of inflows. And in terms of outflows, it was iShares with their European equity ETF, IEU, that had close to $28 million of outflows, which is indicative of some of the landscape and sort of what European equity markets as well.
Can you tell us a bit about which were the best and the worst performing ETFs?
Yep, so BTS actually had the worst performing and the best performing, so it took out the crown on both ends. In terms of their best performing ETF, it was from BTS, their OO ETF, and that had close to 9% outperformance over the month of June. In terms of their worst performing ETF, it was the BTS Agricultural Hedged Product, QAG, that had negative 14.2% over the month of June.
And which were the most actively traded ETFs?
Yeah, so this is an interesting stat I was looking at over the month of June in terms of number of trades on the ETFs. And in the top 10, a majority of those are the foundation building blocks of portfolios. So the Vanguard Australian Equity ETF, VAS, so your ASX 300, your IVV, your S&P 500, or your global equity, sort of MSCI World ETF. So things that really make up the foundation of a portfolio. But then rounding out that top 10 was the ETF Securities Robo ETF, iShares Emerging Markets, and the BTS Nasdaq 100 ETF. So obviously tends to indicate that clients are starting to look outside of just the foundation building blocks and starting to play a few of those thematics and sectors.
Now moving across a bit more to trends in the ETF world, I saw that Vanguard removed all of its fees on ETFs. I know that this is a US specific thing, but is there anything that Australian investors should be aware of?
Look, yeah, with Vanguard, that's on their own brokerage platform, and what they did was they actually removed all commissions on trading of ETFs across every provider. So I think it's close to 1,800 ETFs, and this is in the US. It's very common in the US and in Europe for brokerage platforms to actually enter into an exclusive agreement with an ETF provider. Fidelity did that with iShares in the US, and essentially it could be for a subset of their ETFs where there is no commission on the trading of those products. Here in Australia, we're yet to see that. It will happen as the ETF market matures and also as the usage of ETFs increases amongst retail investors.
The other thing that we've been following really closely over at Nestegg is the trade war, or at least the trade conflict between the US and China. What impact do you think that's going to have on the ETF market?
Well, I don't think it's just between US and China. It's between US and Europe, US and the North American and NAFTA agreement, and even potentially Australia to a certain extent.
Yeah, totally.
Yeah, so I think what we're going to see there is if there's a elongation of trade wars from the US and their allies, there could be a case that there will be impact on global growth and also an impact on inflation. Now that's in the long term, and that's a very sort of dire situation. What I think in the short term is you may see some slight impact on markets. There's a lack of confidence in terms of the trade wars have gone on now for a number of months. When will they finalise, and what impact will that finally have?
Yeah.
On those actual countries though, when you look at it in terms of the US, China and even Europe, the impact that the trade wars would have specifically on those countries is not as great as people believe. I think it's between 29 to 30% in terms of import and export as a percentage of GDP between the US and China. And so the impact on trade wars specifically on those economies as abroad may not be as great. But when you look at the individual states on agricultural states from the US, or within Europe in Germany, where they do have a very export-driven market, especially in the automobile sector, the trade wars will have a massive impact on those specific areas.
Yeah, so I suppose it comes down to having a bit of perspective.
Have a bit of perspective. In the long term, there is a belief that how will that impact on emerging markets. So the positive side could be that they could enter into individual agreements with China, with the US, and that could be of benefit. But then on the flip side, if these trade wars continue, does that flow on to the emerging market? So for clients from an ETF perspective, they can play those specific views using the various ETFs that are available. So if they want to play emerging markets, there are a number of emerging market specific ETFs. If they wanted to play Europe or the US, again, there are a number number of specific ETFs they could play.
Moving across to the UK, they did quite well in the World Cup, but on the political front, things aren't looking quite as cheerful. Is there anything that investors should be across when it comes to the UK political situation and what it means for ETFs?
Yeah, I think it's going to be a bit of a concern to see how the whole Brexit negotiations play out for Theresa May. Will she still be there in the next few weeks? Will there be a potential political challenge from Boris Johnson? What has been the case has that since the Brexit referendum in June 2016, the pound has devalued. But on the flip side, you've seen the FTSE UK market actually increase. And that's been because a lot of the UK companies that drive the FTSE are actually export driven. So they positively are impacted from a weaker pound. Now, for clients sitting in Australia, what can they do? How can they get that exposure to Europe or the UK should they want to? Europe makes up 25% of world global markets, so they need to have some exposure. It's either where they want to be overweight or underweight. Now, there are 5 European equity ETFs available for clients from ETF Securities, BetaShares, iShares, Vanguard and UBS. All have slight nuances. If you want no UK exposure, then the Euro Stoxx 50 ETF would be the one to look at. That's the only ETF that has no UK exposure, so no pound exposure. If they're happy to have some exposure to the UK, but they want to have a currency hedge, then the BetaShares HEUR product will be one to look at. But if they're wanting to just take the market view and they're sort of happy to take that currency exposure as well, then the products from iShares, Vanguard and UBS would be ones to consider because they are broad Europe.
Well, that's all we have time for today, Kanish. Thanks for joining us, and thank you to all of you guys for listening in to our June monthly ETF update by Nestegg and powered by ETF Securities. See you next time.